So the final objective we have for today is learning objective number 7, information beyond the financial statements. So within annual reports, you'll be able to find information about a number of things that will help you better understand the financial performance and position of the organization, as well as critically evaluate the nature of that information. So the first thing that we're interested in looking at here is information beyond the statements. In particular, we're interested in notes to the financial statements, right? So with these particular notes to financial statements, if I bring up Wesfarmers annual report, you'll have a lot of information in the content section of the annual report that summarizes the main performance and position, but you'll also find sections here which will detail particular accounting policies that will help you better understand the nature of the numbers you're seeing. Now, I'm not going to go through any of these particular items at this stage because we're going to talk about different accounting choices and accounting policies in the weeks of the teaching session. But at this stage, I would just like you to be aware of them so when you're reading this report and you come across them, you understand why they're there. Now, if we go back to the slides, the next thing that I want to point out is there's an independent auditor's report. So big auditing firms like KPMG, PwC, Deloitte produce audit reports that tell us whether or not the organization is providing us with a true and fair representation of the financial performance and position of that organization. So if we look at the contents here, we can see on page 162 of Wesfarmers annual report, there is an auditor's report. So if I put in 162, I'm not sure that's 160. Let's go here. So they use EY, so Ernst & Young, and their opinion there is that in our opinion, the accompanying financial report of the group is in accordance with the Corporations Act 2001, including giving a true and fair view of the consolidated financial position of the group as at 30th of June 2019 and its consolidated financial performance for the year ended on that date, and complying with the Australian Accounting Standards and Corporations Regulations 2001. So they're basically saying that you can rely on those reports. They are as they say there, a true and fair view of how they're actually going. Now, you will almost never see in an annual report, an auditor's report that says that these statements are not a true and fair view, because otherwise investors, anyone that wanted to use the statements would most certainly avoid the entity if they're looking at investing or lending the organization funds. So generally, the auditor will recommend to their client, so in this case Wesfarmers, if they believe there are items that are not true and fair, to make certain changes before this annual report is released. Now, the final thing that I would like to show you here in relation to further information is you'll often see, or you'll always see, a management discussion and analysis about how they feel the organization has performed during the financial period that the report relates to. So if we look at Wesfarmers annual report and we again go up the top and we look for the contents section, you can see there that it has reports from the managing director. Okay, so that's on page 10, which is relatively early on in the document. Okay, and the chairman's message here is that 2019 financial year was one of the strongest profit contributions by Wesfarmers activities, coupled with a major change in the makeup of the company's business portfolio. So they divested a number of entities during the period. The managing director, who's obviously in charge of the organization, will say more about how he or she feels about the financial performance of and position of the organization. Now, remember that basically the managing director can say whatever he or she would like, and so you always need to be careful when believing the nature of the information you see here. So sometimes if performance hasn't gone so well during the year, which is certainly not the case in this organization, they'll often attribute that to factors external. Now, it's up to you to work out whether or not you believe that's the case and then interpret the financial statements accordingly. So just be very careful. Remember, as I said before, you need to critically evaluate the nature of information in financial statements as you read them, so you can make sure that you have an interpretation of the business that will be helpful for your decision-making processes and will therefore help you make the best possible decision. Now, a few things before we finish up for today. I would like you to answer this question. Now, there's a number of ways you might have considered in terms of the logic you use to answer this question. The first thing here is that I paid $140 to fill the car up, which I then used when driving the car around. When I returned, the car was empty, and so the price then costs $1.60 per litre of fuel, so $160 to fill it up. So therefore, not that I charge my mother anything when I drive her around, this is hypothetical, of course. How much did I charge her, or should I charge her in this case, which is of course nothing, but if we had to charge her something and follow the accounting principles and characteristics that we looked at last week, which one would we choose? And the one that you should go for in this case is A, $140. And the reason for that comes back to the cost principle. The value we attribute to assets is based on the cost we pay for them. So, or the amount we pay for them. So in this case, we used 100 litres that cost me $1.40 per litre. So $140 worth of fuel was used as the car was used, right? Not $160. That was incurred when the car was returned, filled up, and that's sitting there ready to use next time I take the car out. So the cost of what we actually used up was $140 worth of fuel. It was not $160 worth of fuel. Okay, that's the first thing that I would like you to answer. The second thing that I would like you to answer today is this question. So some of you might be wondering what I'm doing in front of this Mazda. Well, you've learned about what accounting information shows you and what it can do, but you haven't learnt a lot about the mechanics of accounting. So just like in a car, if we open the bonnet here of this car up, there's a lot going on under the bonnet, right? To understand in detail how the system actually works and how this vehicle works. And in accounting, we're going to look very carefully at how those financial statements are constructed and how the information actually enters those statements is consolidated together so you can critically evaluate the appropriateness of that information and so you can make better, more informed decisions. So while you might have understood what we've covered so far over the last two modules relatively well, which is great, from next week onwards, it's going to be a little bit more complex and it's going to be much more mechanical in terms of the systems we're going to be looking at. So see you next time. All the best. Make sure you engage in your tutorials and we'll be back here next week.